Good morning. All right, it seems as I've received a thumbs up to go ahead and get started. Thank you all for attending this workshop. Hopefully you'll get a lot from it. It's a 30-minute session, but it's a lot of information we're going to cover in this 30 minutes. So I'm with SCORE. This presentation is being brought to you by SCORE. Just by a show of hands, how many of you are familiar with SCORE in your cities? Okay, not very many. So imagine this. There's a resource for small businesses where you can get free mentorship. SCORE used to be an acronym for Service Corps of Retired Executives. And SCORE is a resource partner of the Small Business Administration. So imagine you can get a free resource partner or mentor to help you guide you in your business free of charge. SCORE's been around for over 60 years, and we've been helping small businesses launch their business, grow, and thrive since 1964. So I like to say, the business consultants for the Small Business Administration. We're a nationwide network of more than 10,000 volunteer counselors. We're all volunteers. So the work that we do, we pay it forward. Everyone in the organization is no longer retired. There's those in the organization like myself who we're still running our companies, but we'd like to pay it forward. So regardless to what city you're in, you will be able to tap into the resources for SCORE: free education workshops, seminars, one-on-one counseling, online counseling. I really like to take the time to let you know about those resources, because there's going to be a lot of information that we're going to cover in this particular program. And I want you to know where you can go to tap into these free resources. I'm YUSEF Muhammad. I've been with the organization for 21 years. I'm from Houston, Texas, so I talk with a twang sometimes and talk a little slow, but I've enjoyed every moment working with SCORE. I also teach an executive MBA curriculum out of Boston to CEOs and CFOs and COOs to help them grow their business. I sit on a number of banking association committees and boards, so I have a unique expertise in this particular topic. We're talking about recipes for growth and how to fund your business. So, this, I think, group is going to be a great group, because when you talk about a recipe for something, you understand the ingredients that it takes to make something really good. And I'm going to talk a lot about what I believe throughout this presentation. One of the things I believe is this is the ingredients that it's going to take if you're looking to access capital. You need to be prepared. And we're going to talk about that, because I think that's one of the most overlooked items when you're trying to get access to capital. And we'll go deeper into that into this discussion. That plays into the funding strategy. You need to develop a funding strategy because you need to understand what programs the banks have available for you to apply for. What banks are lending. Where do you get that information from? Most of us will either go to our bank or we'll just pick a bank that we were referred to and we'll apply for a loan and we'll get denied, but we don't quite understand why. So we're going to dive deeper into that. We're going to talk about use of funds. Use of funds is very important when you're talking about getting a loan and when you're completing that loan application and that interview with that banker. We're going to talk about sources of funds. Where's the money? How can we get access to it to scale and grow our companies? Eligibility requirements. What are some of the eligibility requirements that the banks are looking for? And then what does the bank actually want? All right. So I want to start by saying that I believe that the meeting with the bank, with your banker, is one of the most important meetings that you're going to have, because you need to prepare for that meeting before you go and have that interview with the bank. You need to find out first and foremost, are you in the right bank? Not all banks are created equal. To give you an idea, in Houston, Texas, we have over 700 banks just in the Houston area. So how is a small business owner to know which bank to go to get access to capital? What loan programs do they have? At Houston FinTech, which I'm the CEO of, we specialize in alternative financing solutions for small businesses and real estate. So we're helping companies get prepared and get funded on a day-to-day basis. And I'm gonna kind of talk about some of the challenges that we have to overcome when we're working with clients in order to get them funded. And again, being prepared is one of the things that I think is really overlooked. So let's talk about preparation and the restaurant industry, because when I did a little research to look at how long does it take to do prep work for a dinner, I saw that most restaurants need 2 to 6 hours of same-day prep before dinner. Total prep time often spans 1 to 3 days. So if you're in quick service, fast casual, 1 to 2 hours for batch sauce, veggies, proteins, so on and so forth. You all understand what it takes to do the prep work to get prepared, whether it's quick service, fast casual, full service Bristow takes 3 to 5 hours, fine dining, tasting menus 6 to 10 hours. So if it takes that long for you to prepare for a dinner, imagine how you should prepare before you go to the bank and apply for a loan. You follow me? All right. So we talked about not all banks are created equal and meeting with your banker. I want to really dive into that because it's so important. How many of us in here has a relationship with our business banker? Okay. So I like to test that theory whenever I'm speaking to an audience, because if you have a relationship with your business banker, you should have their cell phone number. They should have come to your location to see your business. They need to understand your business, because having that first meeting with a banker, if you're just applying for a loan at a random bank that they don't know you, who's going to represent your application to underwriting? Underwriting those individuals are unique animals. They are looking out for the best interest of the bank. They're not on your side. They're looking at the black and white information contained on your application. But if you have a relationship with your banker, you can meet with your banker in an informal setting and say, Mr. Banker, here's some of the things that we're looking to do. And your banker could tell you, our bank is just not interested. We don't have an appetite for that particular thing that you want to attempt to do. But I can tell you a bank that may have an appetite for that. That's a good banker. That banker also, when you apply at that bank, will represent your file to underwriting. So when underwriting starts asking for more documents and more documents, this banker will be able to speak up and say, Mr. Banker, I know Susie, she's been in business for quite some time. They were able to weather the storm of COVID. This is how they were able to do it. So preparation is critically important. In order to get your foot in the door, you need to understand your financial SWOT. We hear these terms when you're developing a business plan: your strengths, your weaknesses, your opportunities, the threats. We understand that when it comes to a business plan, but you need to understand your financial SWOT as it relates to your finances. When we talk about strengths and weaknesses, right? Your strengths are the reason that you're there to get the loan, but you when you're interviewing with that particular lender, you have to understand that they're always going to be asking qualifying questions. It's not just a casual conversation for them to get to know you, to hear more about your recipes and the people that you serve. They're trying to determine your eligibility for this loan, right? So when you're talking about your financial SWOT, your strengths, you're going to tell them that you understand how to supply the demand. You've created a demand for your restaurant, and people love your food. They love your recipes. So your strengths is you understand your business, your customer, and you understand why they're coming back to your restaurant. But you also need to be very honest with this banker to be able to discuss your weaknesses. But before you go to the bank, you need to understand your weaknesses. You need to understand your current financial position. A lot of times when we talk to customers, they don't know their credit score before they go into a bank. The banker will ask what their credit score is. They're guessing, or they're going on the Credit Karma or Credit Sesame. And there's over 10 different FICOs. We'll talk about that in just a second. And you don't know which credit bureau the bank is using. You don't know if it's FICO score 5 or 6 or 8. But you need to get familiar with your current financial position before you go to the bank and have the interview with the banker. You need to understand, what's your quick ratio? How many of you have ever heard the term quick ratio? You should also understand your current ratio. These are financial terms that you should have a conversation with your accountant or your CPA about, to understand where you stand, how healthy your business is before you go and have the interview with the banker. So when you're talking about the weaknesses, because when they ask for your financial statements, they're immediately going to hone in on those things that raise a red flag or a concern to them. When you talk about the opportunities is why you're here to get the loan. Either it's you're going into the holiday season, there's some seasonal event, you need to get up inventory, you need to prepare for a marketing event, but you're able to communicate with the banker, what is the opportunity that you need this loan for, all right? And then the threats. What's going to happen if you don't get this loan? How is it going to affect your ability to operate your business or achieve your goal as you continue? So I want to talk about the elevator pitch, which is so important when you're meeting with your banker. Your banker, although if you have a good relationship with your banker and you're talking to a banker that you're already familiar with, they understand your business. But if you're going to a bank for the first time and they're getting introduced to you for the first time, then you need to be able to communicate what you do. Most of us are so passionate about what we do. We want to tell them how passionate we are, how our customers love our food. Bankers really don't want to hear that. They want the facts. They want you to tell it, not sell it. When you're sitting there talking to them, they don't want you to use embellishments. They want you to use the facts and explain to them about your business and why you're here to get the loan. It's like an opening statement as an attorney goes and he talks to the jury and he tells them what he's going to prove before he actually proves it. But he sticks to the facts. He doesn't go into these grandiose stories, and you shouldn't as well when you're meeting with the banker for the first time and you're trying to get introduced to this particular banker. and your business plan or abbreviated presentation. Most of the times when you go to the bank, they're going to ask for a series of documents. One of these documents, different banks call them different things. You will hear business plan, you will hear business description, short summary of what your business does. You have to understand that they're not looking for a 22-page business plan. They want to see a 1.5 to 2-page business description that is concise but brief, okay? And there's certain information that they would like for you to have in that business plan because, again, they want you to be very, very, very brief but comprehensive. Some of the things that they would want to see in that business description is what's the legal description of your business. I know that may sound trivial, but understand when you're talking to the banker, again, they're asking qualifying questions. So everything that they're looking at, they're trying to determine what type of loan program you would be eligible for, right? So if you put just Mary's Bakery could be a DBA. Well, depending on the size of the loan, depending on your home-based business, really determines your eligibility for certain loan programs. Most of us don't know that. So in this business description, again, there's key things that you want to make sure that you include in this description. What's your corporate structure? Do you have any other partners? If you have any other partners, what's their percentage? It's very important if you have other partners and they have percentages of your business, they're going to become a party to the loan. And the loan officers are automatically going to start asking for their information with the application along with your own information. They want to know what state you're incorporated in, because if you're expanding to another state, you may have to register as a foreign entity in the state that you're expanding in. But if you don't include it in that business description, then it's going to come up later during the application process, but it's best to get that information out up front so everything can be discussed and understood, right? Expectations can be set just during the meeting. So, we haven't gotten deep into the types of loan programs or the types of, or the sources of where you can get the capital. We're still just in the interview part of meeting with our banker. So that's why I'm telling you preparation is so important, that we can get into a lot of the numbers and and all the data that the banks look at. But whenever I do these talks, I said, first thing we need to do is talk about something that's always overlooked and that needs some attention, which is, again, this initial preparation, starting with meeting with the banker, and then we'll talk about the other items. Here's some other things that you should include. What's the owner's background and qualifications? You could have been a retired engineer and you decided to open a deli. The banker's going to applaud you for having a great career as an engineer, but they're going to question your experience to open up a restaurant or a deli. And that's going to raise some concerns when it comes to eligibility. So they're going to want to know who else is managing this business, right? And if you don't have a manager that has the experience, that could be a cause for concern or a point of contention where you'll be denied for the loan. So these are things that you have to think about, be prepared to discuss, and you should have in this business description when you present that to your banker in that initial meeting, right? Then you just sat and you gave your explanation of your business. Now it's the banker's time. they're going to want to have an opportunity to discuss with you about your business. And their questions, again, always qualifying questions. They want to know, is your business viable? Do you have sufficient credit? Do you have sufficient collateral? They want to know, because you're going to be the guarantor on the loan, they want to know, will you qualify as a guarantor, right? So as we talk about this conversation that you're going to have with the banker, let's look at some of the key performance indicators that the banks may ask you when you're having this conversation. To understand how viable the business is, they may want to know, what kind of business are you in? Obviously, you're in the restaurant business. They want to understand, do you have sufficient cash flow? Why is that? They want to understand that up front, all banks are cash flow lenders. So that's why they want to know your quick ratio and your current ratio, because that speaks to liquidity, right? That also helps them to determine what type of loan program you may be eligible for. They may offer you a business line of credit, or they may offer you a business credit card with 0% interest for 12 months, but that credit card may start with a $150,000 line on it. But they need to understand your history. That's why, again, when we start talking about the documents that they require, depending on how long you've been in business and your history and how you've operated, is going to determine the funding strategy. Like we talked about earlier, the ingredients that it takes to get access to capital. In order for them and yourself to know what type of loan that you would qualify for, these are the things that they need to understand about your business. Your cash flow. Have you been in business less than a year? Do you even have a business bank account? Believe it or not, there are some companies that may be catering companies that are just starting out, or food trucks, and they don't even have a business bank account. They're still using their own bank accounts, and banks don't like that. If you've been in business over 2 years, the first thing they're going to ask you, as we talk about the documents that they're going to require, have you filed your taxes for 2024? Do you have your current year-to-date financials? These are the things that they want to look at during this meeting to quickly ascertain if your business is viable. What's your cash position? They want to understand, are you profitable? They want to understand, are you solvent? You may have been operating for a couple of years, say 3 or more years, but they want to know, what assets do you have? Do you have any assets? Or is your liabilities more than your assets? Do you owe more than you own? You know, in the restaurant business, there's very small margins. You all operate, and I applaud you, because I consult a lot of restaurants. And in the program that I teach, the Executive MBA program, I have a lot of restaurants that come into the program. And I'm amazed at, how passionate you all are, but the margins that you operate with, and how efficient you have to be. It's like your game is a game of inches. So it's very important that every item counts. Waste is not, you have to be very mindful of waste, and your employees. It's like you have to have a very well-oiled machine. So when we talk about growth and we talk about expansion, that's why I wanted to introduce the value of SCORE, because in SCORE you have mentors that are from different industries that could sit with you and help you work out some of the kinks that you may be experiencing in your business. It gives you someone that you can talk to, because you can't talk to your employees, because now they're going to lose faith because they see that you've been operating in the red And now you're starting to take out these MCA loans. I hate MCA loans. I don't know if you all are familiar with the merchant cash advance loans, but a lot of people tap into these merchant cash advance loans, and they'll get one, they'll get two, and before you know it, you have $500,000 worth of merchant cash advance loans. And then when you come to us, and the SBA, they don't refinance those loans anymore. We're helping you to find a way to refinance out of these merchant cash advances because it's hitting your account every day. We have some clients that are paying $14,000 and $20,000 a day in merchant cash advances, and they have other loans, SBA loans and other loans. They're generating $6 to $10 million a year, but again, when your business, I understand how your business operates. And I understand if you're going to grow or if you're going to need more staff or, you're trying to turn the business around, that you need to do certain things. But there is another way. Let me just put it like that. We've helped restaurants really become successful. And I only have a few more minutes, so I want to finish this presentation. I believe that if you go to the bank and you say, Mr. Banker, Mr. Banker is still having a conversation with you, and he says, well, how much money do you need? If you respond to Mr. Banker and say, I don't know, how much will you give me? That's not an answer that you want to give a banker. That means you don't have a plan. That's a red flag. They have to allow you to complete the application. So they're not going to say no, but I can tell you it may be difficult to get back in touch with Mr. Banker, because if you can't sit and have a conversation about your numbers and understand the health of your finances and what you're going to use the money for. Now we're talking about use of capital. This is another reason banks will turn you down if you don't understand how you're going to use it and you can't communicate it to the bank how you're going to use these funds. So again, you just went into the bank, you had this wonderful meeting with the banker, you talked about your strengths, all of the things that you're doing right, and how your business is growing and how now you need this capital in order to support the growth. What they want to hear is this. This is how the conversation should go. Mr. Banker, I need this capital so I can grow my business and drive sales. I need this capital to increase production or my service capability, or to boost my profits, or to manage the cash that I have engaged in the business. And Mr. Banker, let me explain to you how we're going to use this capital. If we're going to drive sales, we're going to open a new location, right? Well, when you talk about opening a new location, are you going to be leasing a space or are you going to be buying the building? Those are two different types of loans, which means it could be different types of banks that you would approach to get those particular loans. That's why it's important, if you don't have a relationship with your banker, these are the conversations that you can have with them before you get ready to apply. And that preparation time, I know when we're ready to make something happen, we're ready to do it now. We need the money yesterday. So when I talked about preparation, how you all have to take that time to marinate that food to get the taste that you want, this is the time you need to put into the plan. In that preparation, if you're looking to open a new location, you need to be able to plan and show them what the plan is. We're opening this new location because we started as a food truck. Now we want to expand into a physical place. It's going to help us where now we can produce more food. We can launch new products. It'll increase our sales, which will increase our margins. You have to be prepared to have these types of conversations with your banker so they can understand and get behind what you're doing. And all of your paperwork has to match what the plan is. You understand? So if you're looking to increase production, say you want to automate or add equipment, you want to upgrade software or technology, you want to train additional staff, these are the things that when you talk about use of funds to a banker, it makes sense because you're looking to grow the business. And then you're sitting there not only with this business description, but also your financials. You're showing them your month over month, your P&L statements that has the percentages in it, that's showing the percentage of growth. And I know you all have that, right? Good. Well, you are the high performer, so I'm talking to the choir. But for those of you who, again, may have some challenges or may be in the process of preparing to go to the bank and have a discussion about expansion, these are the things that you need to make sure that you consider. All right? What lenders look for? Actually, good credit. Obviously, I believe that banks do opposition research on businesses. Let me give you some evidence to support what my claim is. They get your loan application. Did you know that they do market research on your business? They can go and do the market research, pull up your zip code and see what your competitors in that zip code, what they're doing as far as performance. They can pull up their balance sheet. They can pull up their P&L statements, and they can look at the trends just based on, your NACE code, right? And then they can compare it to what your balance sheet, your cash flow statements look like, right? So I believe, yes, you're trying to obtain this loan, but the banks are also trying to verify this information that you're meeting the standards, the minimum standards that they have set for this particular industry and what other companies are doing in your industry. They want the financial statements, so you need to make sure that your CPA prepares them. Your balance sheet, your cash flow statement, your P&L statement, 3 years of business and personal tax returns. Again, if you've reported a loss in the last 3 years, you have to be prepared to explain it. Some banks, if you've reported a loss in the last 12 months or 24 months, it's a no-go. It's a non-starter. Unfortunately, but that doesn't mean that you can't get a loan. That just means, again, that bank you can't get a loan from, but there's always a bank that will have an appetite for your business, how you're structured, and your cash flow. They're going to want to see the personal financial statements and the debt schedule. They want to see all of what you owe. So if you don't have these documents, you should start preparing these documents now and then update them every quarter. Again, being prepared before you turn in that application is very important. Management expertise and your commitment to the business. We talked about the business plan and adequate owner equity and sufficient collateral. Now, the SBA, I'll say this as we close, this is the last slide, because this is sources of funds. Now, there's a lot of different sources of funds that's not on this particular presentation, but here's just a few. Obviously, there's online lenders. It depends on the type of capital you're looking for. There's unsecured term, which are typically your shorter term, 6 months, 12 months. Some can go out 3 years. Your secured term will go longer, 5 to 10 years if you do SBA. There is some unsecured that will go 5 to 7 years. Unsecured is always better. Depends on the amount of your request, your loan request. Fintech companies, we use advanced technology to make the process easier for both the banks and the borrower, which allows you to get access to capital depending on your profile. peer-to-peer, SBA, if ever you don't have the collateral and you're needing a significant loan, SBA is a choice, obviously, that you can turn to. They're the lender of last resort, so if everyone else has told you no, you can always go to the SBA. It's government, so it's going to be a ton of paperwork. They're going to ask a ton of questions, and it all has to make sense and it all has to match. But if you don't have the collateral, that's why the banks like lending or like these SBA programs, because they'll guarantee the loan. So if you default, the SBA will take the hit, and that's another story in and of itself. But there's a Department of Agriculture and Rural Development, Department of Community and Economic Development. You know, there's programs with, how many of you are familiar with micro lenders or CDFIs? Yeah. So a CDFI is a community development financial institution. They are nonprofits. Banks grant them money to lend money to businesses in a particular community. And so they're looking for something different. They're not regulated by the FDIC. So if you're looking to hire people in the community, you're looking to build the community up, you can go to these CDFIs and get access to capital, and the lending requirements are a lot more lax than a typical bank. But these are sources, again, when we talk about being prepared, when I talked about these 700 banks in Houston, and I looked up in Orlando, there are 70 banks, from SBLCs, which are small business lending companies. There's non-bank lenders. We talked about SBA. There's traditional FDIC deposit insured banks. There's so many different types of banks that have an appetite for different type of business profiles that you should do your research before you even attempt to apply. But where do you start? You know, again, I would recommend SCORE, because that could start the process of your research. Because banks do report every month how many loans they do, what are the size of their loans, and they like in Houston, they do all 700 banks, and you can look on there. Some of these banks have amazing marketing programs, so you think they're small business friendly, but when you pull up the chart, they've only done 3 loans in the last quarter to small businesses. So, you know, don't be deceived by good marketing, but understand that you need to do the research on them just like they're doing the research on you. So this is the last slide. For more information on how SCORE can help you free of charge in your city, in your community, you can log on to score.org and find a mentor. That's my time. I really appreciate your attention. If you have any questions, I'll be free to answer. That's it. Any questions? Nope. Here's a question right here.
Working? Yeah.
There we go.
Okay. It's a collateral question. I have a 13-year track record and $15 million in annual sales, regular distribution cycles, solid cash flow. But whenever I went to go get a $500,000 loan for renovations for my AC and cosmetic things, only flat loans were available with personal guarantees, no lines of credit, no equity to be able to be leveraged as collateral, anything like that. Is that just the current environment, or is that just restaurants in general? Is there any way to, you know, I got a pretty healthy business.
You know, unfortunately, that's a common story. I'd be curious, what bank did you go to?
We went to a few. We ended up settling on Cypress, which is a white glove local one to where we are. Yeah.
Did you go start at your bank where your deposits are?
Yeah, I ended up moving over my deposits to the White Glove Bank because that was the best terms that we could get, but
That's
still not ideal.
Yeah, super important. If you go to your bank where you have your deposits and they're not lending you money, do what he did, move your money. Because if they can't lend you, like you said, strong cash flow, he's looking for an equipment loan. There are banks that specialize in equipment loans. I could tell you a lot of banks don't like lending to restaurants. It's unfortunate, but you all have a challenge in finding banks that will lend to restaurants. But he was looking for an equipment loan. That's pretty universal. And just based on your profile on what you're saying, it really should have been a slam dunk. I really think that this was an issue of going, not knowing which bank to go to that would, do that, because you weren't even asking for that much, and you had the collateral and cash, and yeah.
Yeah, the cash wasn't enough to be like collateral on I was hoping for a line of credit, right? But they did require a personal guarantee.
They're gonna require
No
a
matter
personal
what.
guarantee.
Okay.
Unfortunately, they're gonna require a personal guarantee. That's why I mentioned the banker's trying to determine if your business is viable, if you have sufficient collateral, and are you credit worthy as a personal guarantor. But with a collateral, with an equipment loan, your credit score shouldn't have even played a factor in the decision for that loan. You shouldn't have had a hard time getting that loan done.
Yeah. The only other thing is, if you're put in a situation where the loan isn't quite enough and you're looking to bridge that gap without going to private investors, what's sort of I don't think I could theoretically go back to the bank for an additional amount, right? Is there any sort of solutions that you all suggest in that situation?
Yes. What type of bridge? Dollar?
50 to 100, I
yeah.
could cover it with cash flow, but
Yeah.
looking for something small so that I don't have to.
So I want to say this. What city are you in?
Palm Beach.
Palm Beach. So in Houston, we have a number of banks that have these unsecured programs where you can access $100,000 in unsecured cash for bridge capital, and we have stated programs, and there's some of those programs across the country because we're able to tap into them on behalf of our clients. So if you're looking for 100,000, 200,000, just bridge capital, it's available. You just have to know, again, where the banks are that have these programs. And unfortunately, you all are in the restaurant. You're not, you're not at these conventions with the banks, so you don't know them. But I'm telling you, those programs exist, and the threshold to get qualified for those are pretty. They're not as difficult as getting a $500,000 loan. Mm-hmm. So I would start with SCORE, and I'm gonna just prepare you. Depends on your local office. If you have someone in that office that has a finance background, they'll be able to guide you on where to go. But you can tap into the national network. My card is in the back, and I'd be more than happy to point you in that direction. Any other questions? Okay. Yes. On the real estate side, yes, but no. All right, well, that's no other questions. Thank you all again, and have a wonderful event. Thank you.